Thank you for tuning in to another edition of the Vulcan Reports pre-market pulse scan for trading on Thursday, January the 25th, 2018. Starting off with the NASDAQ 100 futures contract hitting a new all-time high of 7,004 and a quarter. 7,004 and a quarter. That's right, you heard it. NASDAQ 7,000 hit yesterday. Now, it's funny that it hit this yesterday, but only after pulling back. So let's pull up the daily chart here and see what goes there. The daily chart's also here in the corner, but you probably can't see it, so we'll blow it up in the big chart. All right, so as you can see, this is yesterday on the daily chart. Market had a nice little pullback and some profit taking. Not an official pullback from a charting standpoint, but just from a bar standpoint. The market did sell off. There was some profit taking at those new all-time highs. Now the market is recovering for Thursday's trading, or at least attempting to recover. Question is, how long is this short-term top going to last? Is it going to last a day? Is it going to last the rest of this week? What's going to happen? It should also be noted that price action has been trading dangerously close to the momentum line. And one could question whether or not is the market about to lose all momentum. You thought that back here when it was trading dangerously close to the momentum line, lost momentum for several days, only to regain it and start trending again. Again, dangerously close, lost momentum for several more days, and then regained it again. So it's just a repeating cycle at this point. We do have the rampage coming up. All right, so you got to look at that. From the daily chart perspective, this rampage takes you into the end of February. All things being considered and equal, as long as the market remains intact, this should be realized. But 7,200 would be doable somewhere after February the 26th. All right, so all things being equal, where are we right now? Well, for today's trading, for Thursday, market just needs to close above 69.08 3/4, and it maintains its bullish outlook. So this is an interesting one to watch, and it should be noted that there is a crash alert on the NASDAQ 100 futures. So we're going to look and see whether or not these play out. The markets have been so bullish in their upward trajectories that crash alerts have been few and far between, and when we do get them, the markets ignore them and continue to run. Will that be the same thing? This week we shall see. It's still got another day of trading, so anything can happen before tomorrow's Take Back Friday. All right, so moving on, let's take a look at the equity side. We're going to look at the QQQ, or the cubes as they are traditionally referred to. All right, same story here. Hit a high of $170.24. In the overnight market, the market has rallied somewhat. Last trade was 169.25 after closing yesterday at 168.41. So you're going to have a gap up. One could argue that basically what the market did yesterday was fill the gap between these two here, and now the market's ready to reverse course and go back up again. So again, this will be one to watch. It's going to be really interesting to see how the markets move. All right, moving right along, let's take a look at we'll take a look at gold now. Look at the gold futures. All right, gold futures maintaining its bullish outlook. Just hit a high of 1365.40, and currently we're at 1358.30. So the market's up $2, maintaining its bullish stance, which is good. So let's see if the market can hold momentum here and close above 1345.80 today. It is looking like it wants to get stronger on the lock-in. From the daily chart perspective, we do have rampage coming up again, February the 26th and onward. Between now and February the 6th, on February the 6th, we do have a vortex zone, as long as prices can remain above it until we get to this vortex zone, and then thereafter you're good to go. The markets fall below the vortex before February the 6th, leading into February the 6th, prices would be in trouble at that point. So we'll see what happens. But right now, this has been a nice run. It's been a good bullish run. Market is picking up momentum. Looking at silver. All right. On the daily chart, you can see silver's trying to run with the big boys. It's trying to run with gold here. Got some good momentum. Got some good upward trajectory back in here. And then you lost it, and you've been moving sideways. Now the market's trying to break out of that sideways zone and build some support. If it can close above 1726 today, then it can carry over some momentum for Tape Back Friday. But from the weekly chart perspective, silver is not all that great. This here is good news, though, for trading. And today, this is good news here. I forgot to give you the quotes. Let's give them. Let's do that. Let's pause here. All right, the Bitcoin futures is down $105 at 11,090. The Dow is up 46 at 26,317. Nasdaq 100 is up 33 at 69.64 and a quarter. E-mini S&P 500 up 6 and a quarter at 28.47 and a quarter. Russell futures up 830 at 1609.40. Nat gas is pretty much about flat at $3.51. And gold is up $2.10 at $1358.40. Silver up about 4 cents at $17.53. Crude oil is up 42.5 cents at $66.02.5. Bonds weaker overall, but up 11/32 at 148.26. Soybeans up 2 1/4 at 9.94 3/4. And we got the euro is down about 5 pips at 124.40. And the dollar is down 3 pips at 89.17. It did hit that 88.80. It got to the 88 handle. Remember what I told you about 88. Pound sterling up 42 pips at 142.84. And the Aussie is down 5 pips at 80.71. Switching back to the soybean situation. On the weekly chart, market needs to close about $17.03 to carry over some bullish outlook for next week. Taking a look at the, GLD. Go to the equity side here. GLD is looking really strong as well. This is technically the day of the vortex. All right, so we got a vortex day here on the GLD. Market's going to need to stay above the Kumo cloud today, and it needs to preferably close above 125.59. Failure to do so, either way, would cause the market to lose momentum, and it will be in danger of dropping below on the vortex. But so far, it is looking good. Since you got a nice upward trajectory here from the day of the vortex, which was the 22nd. This is looking good. And as long as it can stay above it for the week, and then next week we open above, good chance here because we got rampage right here. And you got another major ramp coming down in toward the mid to end of July. So the GLD is looking real good here. Looking at GDXJ, staying in the gold complex. You're in the Kumo cloud of death on the weekly. Market needs to close above $34.36 on Friday in order to maintain a bullish outlook for next week. Remember what I told you, this is an elongated Kumo cloud, and prices will most likely be all over the place. And this could last up until the end of July, just trading sideways. But there's also a good possibility that if this market can get enough energy behind it, it can pop out of this cloud and run. And then this, from here to here, would be null and void, wouldn't matter. Let's see what can happen in this gold complex. All right, looking at SLV. SLV right now on the weekly. Good picture here, nice bullish momentum here. Just needs to close above $16.04 this week to carry over additional momentum. And the same story as the last chart. As you can see, this stretches out until the end of July. So again, the possibilities are endless. We could drop below the cloud, rally outside the cloud. Preferably rallying outside the cloud would be very bullish as the market can get back above 17, and 17 would be the new floor for the next bull run. But then again, if any shenanigans come about, market prices drop below this cloud, it could push prices below 14 before the end of July. So let's see which way the market wants to go. So far, it's looking good though for the bullish argument. Looking at the silver miners, the junior miners, we're below the Kumo cloud. We're still in a bearish market. Market has rallied off the bear market lows to carry over some momentum and get into the cloud, hopefully. Market just needs to close above $11.72 this week to carry over some more bullish momentum. All right, what else? What have we not talked about? Oh, oil, crude oil. All right, as you can see, crude oil right now is at $66 even on the weekly chart. Market needs to close above $62.58 to carry over more bullish momentum into next week. And you can see major rampage coming, which will take prices toward that $70 mark, hopefully by the end of July. We shall see what happens. That's the bullish perspective. All right, market does need to close above $62.58 this week, or it loses momentum and falls in jeopardy. And prices could head back down as low as $57 handle, and maybe even the $52 handle, $53 handle here at this trend line right here. So you got these two support lines. The prices could fall and hit if we lose momentum. So far, upward trajectory is good. This week is a vortex week. Prices need to stay above the Kumo cloud. Next vortex week is coming the week of April the 23rd. Taking a look at the bonds. On the long bond, as you can see, like I told you before in the prior videos, prices are in the bear market, taking out prior lows each week. In order to put it into this downturn, prices need to close above 150.14 this week, and then we will start the correction back up toward 152 and 153 respectively. And then that would also put prices back into the Kumo cloud in here. Market does have a chance, however, depending on how much we correct between now and then, to turn bullish during Vortex week of April the 30th. All right, so we'll see what happens there. Looking at the US dollar. Last but not least, we hit a new low of 88.80. In order to put it into this downturn this week, prices need to close above 91.16. Anything's possible. If prices are able to do that, then it opens up the door to run back up to the first trend line resistance of 92.74 and then 94.74 respectively. So that's here and here. Still will keep you below the Kumo cloud, and then this is major resistance up in here, and you can see it pushes prices back down. You got an inverse rampage that will have prices come much lower, possibly dropping below 88 by April, and then more major rampage toward the end of the summer. So the dollar looks to be weak for some time here, looking into the future. The White House did make a comment the other day, and it was on the business news wires, that they're not concerned about the price of the dollar right now, and that this is good for their import-export, as I had informed you in previous videos. And right now, technically speaking, we are dancing along the abyss, but it's a wide abyss. It's a range between 88 and 77. We don't want to go into that vortex zone because anything can happen. It can take you to 77 before you even realize it. 88 is not good because it's like ice skating on a frozen lake. You don't know where the thin layer patches are going to be necessarily, and it's like Russian roulette. You're skating, and then as soon as the ice gives way beneath your feet, by the time you realize it, you're already under the water. All right, so don't want to see prices sustained at 88. They need it above 90, not at 88. All right, so we'll see what happens. But those are the numbers. That is the analysis. So without further ado, pulsewavetrading.com. Come learn how to trade these algorithms. Everything you're seeing here on this chart is created by algorithms, machines, computers are doing the majority of the trading, and you are at the mercy of the machines if you don't know how to read the outputs. Pulsewavetrading.com will teach you how to do that. Right now, 7-day free trial includes the study course and all the goodies, the one-on-one coaching with yours truly, portfolio review, you name it. We trade all markets, all major exchanges around the world, all securities, all stocks, all futures, all forex, and over 30 different cryptocurrencies, including Bitcoin. Pulsewavetrading.com. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace.